Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, who is a senior investment manager at the Gower Financial Services. We're going to review the third quarter of 2025 and then look at other factors impacting world markets. Just to say, all opinions are personal and no investment advice is being given. Toby, good to see you.
Good to see you, Tony.
What's happened? This year's flying by.
It is. It's unusual because normally we have something going wrong in sort of September, October, but this year it got front loaded in April, so it's all nice and calm and touch
Touch
wood,
wood, fingers crossed.
incident free by Christmas.
Can we kick off as usual by having a look at the market performance over the last 3 months, or do you want to do it over the last year?
Yeah, just over the last years is useful.
Yeah. Okay.
We've
So
had um, yeah, so the it's been a tale of two cities for the stock market and bond market in the UK. So the FTSE's up about 19% and gilts have lost 1%.
right.
Um, and then overseas, we've had unusually had the pound being quite strong. So on the surface, foreign markets have looked to be doing wonderfully well at 20 plus percent. But when you take into account the strength of the pound, that kind of muffles returns. So in the USA and Japan, you've had returns about 15, 16% in the mainstream indices, similar with Europe as well. Obviously, the Nasdaq and technologies flavor of the month, and that's shot up. But again, in sterling terms, it's about 20%
Yeah.
gains for the year. Not to be sneezed at.
No. 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 Do you find this is reflected in the various funds you are involved with?
Yeah, we've had a good quarter and also a good year as well as a company. We've had a clean sweep against competitors, which we monitor. We also use them as well, so it's not just us versus them. So all in all, quite pleasing. What we don't want is too big a gain over the any one time period because that's kind of inviting a potential sell-off.
Yeah.
Because people are using phrases like melt up and that's what you don't want to see. Is you don't want it to be like the late 90s where you had a string of good performances going sort of parabolic sort of up the chart because in nature, nature hates these patterns and you get a collapse afterwards, like a colony collapse for, you know, viruses or ladybirds. It's
The so-called adjustment,
yeah.
which usually hurts. But of course, it's the old story, isn't it? It's not a loss until it crystallizes. So you can hold shares or you can hold funds, and they can go up and down, but you don't actually make the loss unless you cash in.
That's true. You've got to make sure you don't hold some onto something for the sake of it, because the market doesn't care when you bought it. It's all down to the future of that investment. So things
Yeah.
are genuinely gone to hell in a handcart. Like look at Japan in the late 90s, sorry, late 80s. That's only just recovered a few years ago. So
Yeah.
you've got to be wary about cutting your losses, and it's actually very good from a financial health point of view is to get rid of stuff that's showing a big loss. So psychologically, you're not clinging on to it. But at the same time, you don't want to be just reacting to sell-offs and running with the herd. You do need to sit on your hands quite a bit.
So the answer is professional management.
Oh well, obviously.
You couldn't possibly comment on that, I know. Now, what about Brent crude? That seems to the oil price. That seems to be fairly stable, doesn't it, at the moment? Nowhere near the $100 a barrel that it was not so long ago.
Yeah, it has been very subdued. We've been seeing OPEC and the so-called OPEC plus countries pushing up production, and that helps because it stops individual countries cheating on the periphery and making matters worse. But the likes of Saudi Arabia need oil to be at about 90 plus dollars for their future budgets, having this massive transformation in their economy to reduce oil reliance, and that's across the Middle East that's happening in country after country. So at the same time, it's kind of a Goldilocks thing where the oil price has got to be just right
Hmm.
because if it goes too high, that then makes the the shale producers in America more attractive, and if it's too low, it's just that the budgets are blown apart. So at the moment. while oil prices are stable, and that's good for us and the West. Um, for the oil producing countries, it needs to be higher. But again, you can't really force this, and because as soon as you start trying to control the supply, um, yeah, like in the crises of the 1970s, then people just start cheating in the background. So it's a delicate balancing act, which I think the Saudis, as a so-called swing producer, get it, make a good job of.
Mind you, having monopolised the football stage in the world, it won't be too long before they can stop drilling for oil and, rely on entertainment.
Yeah, it's quite bizarre. In fact, I've seen friends of mine posting photos from Saudi Arabia, and it's just incredible to think of that as a tourist destination. I used to go for work, and it was a very austere place you couldn't relax in,
Yeah,
and then,
sure.
it's got some amazing results going on. So, well, happy days.
Is it still austere?
I think in under the surface, it's fine until something goes wrong, and then you
Yeah,
find out, it's a very strict country.
yeah, I can imagine. Let's have a look at the currencies. Sterling against the euro and the dollar. You've said just now that there's a bit of strength in there that wasn't so long ago. I think I was getting 1.15 euros to the pound when I went down to Spain recently.
Oh, nice. Yeah.
I mean, it was as high as 120, wasn't it? Not so long ago.
Yeah, it's a gradual decline against the euro. I mean, it has popped up against the dollar because there's a big emphasis on cutting interest rates in the States. So, in relative terms, the pound looks good. We've seen about 8% appreciation this year, but the euro, we've been weaker against the euro. Although that has flipped a bit today because you may have seen in the news that the latest Prime Minister, Lecornu,
Mm.
is the
He
seventh
didn't
under,
last long.
under Macron. Yeah,
Liz Truss revisited.
he lasted a month. And it's a bit like a situation where couples break up and say, "Oh, it's not you, it's me." You got Macron there, and he's had a seventh prime minister, so you kind of wonder what the common denominator is to all this.
But there's got to be presidential involvement somewhere down the line,
Of
hasn't
course.
there?
Yeah.
But they're due for elections, what, in a couple of years, is it? Or something like that?
Something like that. I mean, it's just. I mean, France is quite crazy. I mean, people are getting pensions higher than the sort of the average wage, and it's just not sustainable. But it just it is crazy. And the big thing is you get strikes, and the country gets completely gridlocked.
They're very militant, aren't they?
Oh
In
yeah.
term in
Well,
terms of their outlook on everything.
yeah, and this is where the word communism comes from, the commune, which
Yeah.
harks to the guild.
So we blame
France,
them on that as well.
quite right.
Where do you see interest rates? Do you think they've come to a bit of full stop UK interest rates in terms of the downward pattern?
UK wise, yeah. I mean, in general, we're back to the old normal in terms of the absolute rate. As long as it's above inflation somewhere, still well ahead of the Bank of England targets, which are 2%, and the same in the States. It's kind of an arbitrary figure to look at. It's got no grounding in anything. It's just more for impression and stability. So
Yeah.
as long as interest are higher than inflation, that's really where the credibility remains. But as I say, I don't think we'll get any rate cuts soon in the UK.
And with inflation, I was amazed to see that one of the excuses for the upward movement was airfares. Everybody leaving the UK to go on holiday. I just
Well,
didn't get that.
no, I thought you meant all the millionaires leaving.
But,
Yeah,
I mean, I would have thought most people book their holidays at least 3 months beforehand. So
yeah.
how that actually got into that particular statistic, I'm not sure.
I don't know. I mean, the big input to headline inflation is the beef and food prices. They're going crazy, as you'll know yourself
Yeah,
locally. But there's all kind of inputs like the national insurance hike. It all feeds through to employer costs, VAT. I mean, I know school fees aren't a massive part of the economy, but that's one example. There's also this anti-farming rhetoric that's going on that is making food more expensive to produce, and obviously we've got the energy, the green side of things, which is costing us more and more, particularly
yeah,
in Britain. Yeah.
yeah. And as Donald Trump said, those crazy windmills.
Yeah,
I thought that was
I
classic.
do like some of his comments because they're so honest. It's like,
Yeah,
oh,
absolutely, absolutely, shooting from the hip. Now we hear a lot about the state of the nation's finances
mm,
being geared up to the 30-year gilt. And I want you, because I don't fully understand it, and I'm sure a
okay,
lot of our friends don't understand it, I want you to give us a little lecture on it in
sure.
terms of how it all works. Um, uh, it's really all about the yield, isn't it?
Yeah, so you need to differentiate between two things. You've got the interest rate set by the Bank of England at 4%, whatever.
Yeah.
But you have a market or long-term interest rate for borrowing over very long periods, which is the 30-year gilt. It's a very common thing you look at in the United States because they base their mortgages
Hmm.
on the long-term interest rate. This isn't set by the government, it's set by the market itself. And you can think of it being like a thermometer of the state of the economy. So the higher the yield, the greater the risk of the bond. So you've got more inflation, you've got too many bonds being issued. So it's very much a canary in the coal mine, and it's a very useful indicator. So also, when interest rates are very high in the long term, it means that the relative attractiveness of the stock market is depressed as well. So it's got several functions as like a market indicator. So yeah, to my mind,
Yeah. Okay.
it's the
So,
key
so
figure.
do they issue one each year?
They do issue a lot of bonds, but they don't issue it at the very long end, particularly. So, for example, so-called yield is close to 6% for 30-year government bonds in the UK. But the thing is, there's no point in them issuing that because they've got a big interest bill of 6% a year. They'd much rather issue, at the very shorter end of the
Yeah.
market, at maybe 4%.
Yeah.
So pension funds really love these long-dated bonds. But yeah, they just don't come on the market that quickly. And despite of all the sort of woes in the UK, one of the latest auctions was very heavily oversubscribed. So pension
Right.
funds really need these type of
Yeah.
investments.
Yeah. So I've got £1,000 to put into gilt edge stock.
Yeah.
Okay. And I'm going to go for the 30-year gilt. How much am I going to get for my money?
Okay, well, it's actually it looks like a bit of a bargain because the current 30-year gilt is priced about 80 pence in the pound.
Right.
But the coupon or interest you get is only above 4%. So about the
Yeah.
same as you get in the bank, really. But things are locking in that long-term interest rate. But I don't think there'll be any issuance in that area for any time soon because it's just too expensive um, for the government to sell that to the market. They'd far rather sell bonds, which always start at £100 as their so-called
Yeah.
nominal face value, and then pay an interest rate of 4%. But
So
these
I'm
things
going to get
very,
more
very
for my
close.
money, aren't I?
Yeah.
I'm going to
Yeah,
get a,
you're getting a
yeah,
bigger
for my
bang for your
thousand
buck.
pounds, if it's trading at 80, I'm going to get,
Exactly.
yeah, I can't actually work it out at the moment, but
Yes, you spend 800 quid, but
yeah,
it does mean you're getting an overall return of the interest and the capital
yes,
appreciation
yeah,
will be 6% a year on
yeah,
average.
yeah,
It's
yeah,
just called, yeah, it's a gross yield. But the way I think of it mentally, think about these things in a simplistic way. Think about the price of the bond um, and the yield being the kind of income. Unlike a bank deposit where the price is stable,
yeah,
the money doesn't change. With gilts, the price can go down, can go up. So you think of like a cantilever scale, like sort of lever arm scales.
yeah,
Price goes down, the yield goes up.
yeah,
Also, as let's say you got big economic depression coming, the yield or interest rate is going to fall and the price shoots up.
yeah.
So so investment managers can play this relationship. But yeah, so it's an inverse relationship that is worth keeping in mind. Um, so a few years back, when interest rates were next to nothing, people were overpaying far more than £100 for a bond just to try and get any income possible. So
Mm.
yeah, just think of it as literally
Yes,
two
as a
sides.
balancing act almost, isn't it?
Exactly.
Yeah, yeah.
Yeah.
Can I say that was very, very well put? I
Oh, thank you. That's
understand.
very
I
kind.
understand it, Toby.
You get so much jargon, and I always, because I've got a sort of science background, I like to boil things down to simple models of how things
Yeah,
work. It's not necessarily 100% accurate, but they give a picture in your mind that cuts through all the noise.
yeah, yeah, yeah. And of course, at the moment, with the parlous state of finances in the UK, this is the reason that the yield is high, and effectively they're having to discount prices. But
Yeah,
that's not the government actually suffering from that, is it? It's the buyer and seller.
it's the yeah, because the government always gets the £100 for every
Yes.
bond they issue.
Yeah.
Yeah, so you've got to be very careful because it's all well and good buying a 30-year bond to lock in a total return of 6%. But if inflation shoots up again, the yield will shoot up and the price will fall. So you could
Yeah.
leave 10-20%. I mean, there was one point where gilts lost 20% in a year just a couple of years ago. And these are meant to be safe investments, and they're called
Yeah.
gilt edge securities. He's meant to be sort of backed by gold originally, and of course they're not anymore.
UK borrowing is going through the roof. There's a £50 billion alleged deficit coming up, which will be looked at in the budget. How long before we get bust? Go to bust?
Well, we're quite lucky because, in theory, we can't go bust. It's not like in the 1970s where the International Monetary Fund had to come
Yeah.
in. But if you think of another example, like an emerging market where what they often do is they borrow in a foreign currency like US dollars, and when interest rates go up in the States, they can't afford to pay back that debt
Yeah.
because they don't have enough dollars, and their economies are precarious, so they go bust. So you got the Russian crisis, Asian crisis, where similar things happened. In the case of the UK and US, we can print our own money, and these bonds are priced in sterling. And in theory, you can go on producing bonds till the cows come home. Obviously, the price will fall the more you produce. It's like supply and demand. But theoretically, you cannot go bust, but you can have a confidence crisis. And really, the pressure valve of all this is the pound itself. So the debt can go to the moon. Like in Japan, it's 250% debt GDP ratio. The UK is 100%. And you keep on doing this, but it's the currency that weakens.
All the
So
time. Yeah.
it's a very well, it's actually more than gradual. I mean, in the UK's lost a significant sum in sterling in the last 5 years, but you can't see it. It's like a boiling frog theme. Um, it's just getting worse and worse, and this is why gold and Bitcoin are going completely crackers at the moment.
And obviously, until we see an amount of stabilisation. But I read somewhere the other day that the IMF didn't have enough money to bail the UK out.
That potential. I mean, they can issue bonds to the market, and they're obviously AAA rated in
Yeah,
great demand. So they've probably not got enough sort of it's like working capital to do it, but they
yeah,
can issue more
petty
bonds, and
cash.
it's but it always comes at a price. It's like the child catcher in Chitty Chitty Bang Bang. It's all free today, and then when the curtains come off, you're in a cage.
Yeah,
And this is how emerging economies get caught in the World Bank debt trap, and they're forced to sell their commodities at cheap prices to the West. So it's a form of imperialism, which is financial rather than military.
mm, mm, mm. You reasonably happy that it won't come to that sort of situation?
For the UK, I mean, all countries are at it. I mean,
Yeah,
obviously, talked about France earlier. Their debt GDP ratio is 110%. And
yeah.
it's normally like a tipping point. I heard on a commentary recently about Neil Ferguson, this sort of economic historian, talking about a time that historically, whenever a country spends more on interest than it does on its defence, then this is where it all falls apart. What he hasn't really factored in is the fact that in past examples, these countries were on gold standards.
Yeah.
There was a limiting factor. Now every country's a race to the bottom to just print their way out and kick the can down the road. And eventually, I think there will be some intervention to cap long-term interest rates, and this happened after the Second World War, called financial repression. So no matter how much debt you issue, the government might set the yield that you can get. And I suspect, because I asked about this at a conference in London recently, that the method they'll use is that they'll tell the Federal Reserve in the States that will give them a third job to do. They got maximum employment, inflation at 2%. They might have a fixed level of bond yield that they target as well.
Yeah.
So your governments will never blow up and go out of business. They'll just find a way around, which means inflation.
Yeah, absolutely. Right. Well, there we are. North Sea oil, drill, baby, drill. That was President Trump's suggestion. Bearing in mind it's UK owned,
Mm.
the oil fields, could you circumnavigate, get round the actual requirement to sell it at international market price?
I
If you
think it's really
sort
a
of did a
case.
deal with the producers?
And this is what Russia does with India and elsewhere. It's done off the table. I mean, the thing is, we have an ideology about the carbon emissions, which again we discussed before, and I won't be too controversial about, but it just takes political will.
Yeah.
And in one moment you've got America sort of having this so-called Inflation Act, which has been spending lots of money, which I never quite worked out on green projects. But the Greens investments are really doing poorly. We just had one fund from Schroders last week closing. That's a pretty big institution.
Mm.
So the capital going to this area isn't that strong, and it's just not the theme of the day anymore. So ideally, the UK will get on board and follow the US's lead in producing more oil, just like the OPEC are doing,
Yeah, yeah,
looking
yeah,
after
absolutely.
ourselves
Yeah, yeah.
rather than being stuck in this cult-like idea that we're going to save the world somehow.
Because I mean, the fact of the matter is that UK electricity prices are substantially higher than a lot of other places.
Yeah,
So
it's
you can't expect industry to do anything like steel making, for example,
mm,
if they're paying twice as much as their competitors.
yeah. I mean, it's I think it's a multiple in America. I think we're several times more expensive for electricity production. We won't mention SARC at this point because that's a special case.
Well, they're not doing much steel production there at the moment.
Exactly, yeah. And of course, see, with this green agenda, all that happened in the UK is that the steel production got outsourced to India. So
Yeah,
I won't. I'll try not to get too much into the
involved.
topic. But you can. There are ways out of this, but you need the right philosophy in the first place. And
Yeah,
President Trump has this America first idea, and
yeah.
America will benefit.
And of
And
course,
also,
he's pulled in squillions of dollars in terms of tariffs, hasn't he?
yeah, and they're going to be producing cheaper energy, which means greater access to artificial intelligence.
Yeah.
So in every way, we're just getting further and further, getting more European and behind the curve and going stagnant.
Mm, mm, mm. Now, I heard this morning, today is the 6th of October, that Jaguar Land Rover are going back into production.
Oh, great. Okay.
Yeah, so they seem to have sorted that, but it just goes to show the vulnerability, doesn't it, of these organisations, when hacking takes place.
Mm.
Also saw it with the airports recently, didn't we?
Yeah, it's very difficult to counter. And again, it's easy to be conspiratorial because normally conspiracies turn into fact.
Yes, absolutely. Yeah, yeah, yeah.
But you do wonder who's behind some of these attacks because ultimately there's a big move, a big section of the American neoconservative movement who want war.
Yeah.
And you just go down through the centuries to look at these so-called false flags where one government says, "Oh, look at this enemy action over here," and actually
Mm,
it's being generated domestically.
mm.
So you've got to be very suspicious of anything that looks, um, which always points to the Russians, always points to the Chinese, because you just don't know in the very murky world of espionage what's going on. Particularly in the UK. I mean, because Keir Starmer's a member of the Fabian Society, which is a very far left
Yeah,
organisation,
absolutely. Yeah.
as are some of the judges who
Yeah.
given ridiculous sentences for
Yeah.
tweets and Facebook comments, and they're mascot or or motto is a wolf in sheep's clothing.
Yeah.
So you've got to be very careful. You have a government who are determined to create chaos,
Yeah.
potentially to introduce tyranny. I mean, talk about digital identification, and lo and behold, Tony Blair's son is CIO of the company that is going to produce this. So nothing to see here. So overall, you've got to be really cynical about what's going. Feel terrible for the companies who are being attacked, but
Yeah.
who's doing this?
Yeah. One thing I've never understood with the far left, what is their ultimate aim?
It's always been the same. You think about going back to Stalin and before.
Mm.
It's about absolute control.
Yeah.
And you've seen the animated cartoon, Animal Farm, where
Yes.
some
Yeah. Yeah.
animals
All,
are more
all men are
equal than
equal, only some are more equal than
exactly.
others.
And
That
it is
concept.
this. It's all about tyranny, and it just
Yeah.
never changes. There's
Yeah.
endless cycle of swings, far left, far right, and one kind of creates the other.
Yeah.
As human beings, we just can't seem to get off this clockwork mechanism. But I think chaos allows governments to introduce more control, more police powers.
Yeah.
It's getting crazy. And the more digital it gets, the greater the control, and the more it's quite where you become a digital dictatorship and
Mm.
have a tyranny run from a computer. If you can't buy or do anything or move anywhere, uh, this is very powerful. And you add this in with facial recognition, artificial intelligence. I mean, these guys are years ahead of us because they're sociopaths and
Yeah.
they don't think like we do.
Yeah.
And when control is your agenda,
So it's power. It's all about power.
yeah, and companies will bend over backwards to supply the tools for this. I mean, I always cite the example of IBM, International Business Machines, who supplied Germany with, it, up until the time that America joined the war, with the technology to keep records on people, and obviously it's used in concentration
Mm.
camps.
Yeah.
So people just like airbrush these things out of history, but you talk to any company that they'll do anything to get a government contract. So don't
Yeah. Yeah.
you just can't trust anyone to look after your interests.
I mean, talking about that, I believe Hugo Boss had the contract for the German army, didn't
Oh
they?
yeah, yeah,
Yeah, yeah,
yeah.
yeah,
It was it must make light of it, but yeah, they supplied the SS with the very smart
yeah,
black uniforms,
yeah, yeah.
and everyone reinvents themselves after the war.
Mm, absolutely, yeah. That's the way it is. AI, do you fear it?
It's like any tool. In itself, it has the makings for positive contribution, but it's when it's like weapons. It's when humans get involved,
Mm,
then that's where it can be misused in ways I've just mentioned. And again, just it goes back to control. I mean, can it spin off and do its own thing? I mean, I have read books by well-known AI entrepreneurs that fear that it become unstoppable and unhackable by humans, and that's got to be a risk out there. For the time being, the threat is to jobs because
yeah,
it's pretty hard to replace the jobs it can do. Personally, I don't find it particularly useful, but there are aspects to it, analyzing data, which is very good at. But what it calls so-called generative AI, which is writing text, is full of
oh
flaws.
yeah, absolutely.
Has these mad moments where they have hallucinations, they invent things. Like
Yeah,
if you use it for recording a client meeting, which I don't personally, but some people do, then it invents stuff. So
mm.
for now, it can't be created, and you've got to ask yourself, is there something sinister within the machine? And it sounds a bit philosophical, but you've got to think about these things before you let it run free. And
Could
that's
you
not,
could you, for example, though, have a situation where it starts controlling stock markets in terms of sell-offs by putting false data into
yeah.
systems?
Yeah, I mean,
Yeah.
often these systems are designed to, like the 87 crash had the
Mm.
program trading. It just becomes self-fulfilling because it's like a Labrador that's taught to, wag its tail at a certain point. It'll just keep wagging its tail until the signal stops. So there's a lot more scope for that, and much more of the stock market is index based, like passive investing.
Mm.
So people just shove the money, you just track the
Yeah,
index,
yeah, yeah, yeah,
and there's no defense if it goes wrong. This is why I'm very keen on active management,
yeah,
because now we've got to the most extreme levels where too few companies dominate the world index, and people are too much invested in the United States. So all these things are about, I wouldn't say herd following, it's trend following. If you're not on the bandwagon, you'll lose your job if you're not, knocking out these similar performances. So it's just human nature to all charge down the same route. And it takes a lot of guts to, you know, step away and not be dragged along with the herd.
As an investment manager, I mean, are you sort of reviewing things daily or weekly or how?
I think at the moment it's a case of, again, talk about sitting on your hands.
Yeah,
The time being, I'm not, I don't get the sense that this is going too crazy. Think about the late 90s, yet classic symptoms of a bubble market where people are borrowing money or giving up their jobs to trade the market. Even on a company level with artificial intelligence, these these firms aren't borrowing to invest in data centers. This is just money they get from free cash flow, so it's like
yeah,
pocket money for them.
yeah, yeah,
So we're a long way off from going crazy. I mean, retail investors are a lot more involved in precious metals and Bitcoin than institutions. But
yeah.
again, given the pressure, institutions will get involved. So there comes a point where every man and his dog, like the tulip mania, yeah, people just selling everything, mortgaging their homes just to do this. I think we're a couple of years away from that. Ideally, I'd like a nice, smooth
Yeah,
upturn.
absolutely. Yeah,
Just not wired to do this, I'm afraid.
yeah, yeah, yeah. I don't see another tulip incident coming up, but there are other commodities
There's
available.
plenty.
Coming, we get running a little bit short on time,
Okay.
I'm afraid. Very quickly, it's been suggested to me that possibly, bearing in mind the UK's commitment to increase its defence spending, that
Mm.
the Channel Islands get dragged into this. Do you think they will?
And historically, we have been independent. So, in the First and Second War, we never had the draft.
No.
A lot of people, soldiers did volunteer
Yes.
for service, as we know, and proportionally, we volunteered far more than elsewhere. So, I don't think there'd be a draft particularly. There could be pressures to contribute more.
Mm.
Yeah, again, nothing's off the table when it um, comes to spending on defence right now. So I think there could be a financial element rather than a human element.
Yeah.
So our population's aging, like others. Uh, there's also again, the warfare has changed so much with drones. Like my son's just left the Royal Marines last week, and he's now a civilian drone operator. But again, he knows the
Mm.
hallmarks that like 80% of casualties in Ukraine are drone based. This is from both
Yeah.
sides,
Yeah.
and it's really escalating. So that doesn't cost a lot of money itself, but things like aircraft carriers, and tanks, all the old-fashioned
Mm. Yeah.
hardware,
Yeah.
comes at a massive cost, and
Yeah.
everyone's short of it, short of ammunition. But the war machine will just hoover up
Yeah.
assets. This is
Yeah.
why the British
Yeah.
Empire came to an end because of
Well,
this
that's
exact.
right. I mean, you can directly point the finger at that, can't you?
Yeah,
End of war, end of empire.
yeah, end of gold standard and
Yeah, yeah, yeah,
inflation and
yeah, yeah,
poverty. So
yeah.
it's an endless cycle. It'll never change.
Do you think the Guernsey politicians will be happy to make a contribution?
I think they'll bend over backwards to obey whatever the
Yeah,
UK government says,
yeah,
personally.
yeah,
And also, I think we'll be at the front end of adopting digital ID, because we often use as a test bed for ideas from the United Nations and World Bank behind the scenes. So a lot of our legislation is written well in advance,
yeah,
and poor politicians only get their BA at the last minute. It's like 1,000-page documents. Like, who the hell produces this stuff? And
yeah,
it's
yeah,
very much something done in the background, which we just don't know, as the public, and the politicians don't really know what's coming. They see what the end result
mm,
is. So again, you've got to be very suspicious about adopting the latest craze. And you're always sold that the idea that, oh, it's for your security and your you'll benefit with bringing this technology. And of course, it's not. You've always got to think freedom first.
Yeah,
Um,
absolutely. Yeah, yeah,
Otherwise, it's gone. You know.
yeah. Back to what we were saying earlier. But there we are. I'm afraid we've run out of time.
Oh,
As ever, it's
enjoying
been
that.
really good to talk to you because you're
Thanks,
always
Toby.
coming up with the ideas and in an entertaining way.
Oh,
So
thank you.
many thanks for
Good
that.
questions.
Um, Wish you a happy Christmas
Oh yeah, gosh, wow.
and be in touch after Christmas, hopefully,
Thanks, Toby. Great.
for our year review. Mm,
Yeah, yeah.
yeah,
Fingers crossed it all goes well.
yeah, absolutely. But there we are. Anyway, many thanks.
Yeah,
Really good
Dave.
to
Good to
talk.
speak to you.
Cheers for now.
Thank
Bye.
you.